Hello, again, traders. This is one of the interesting trade that I've done on the between 3rd and 5th of April on the Dow futures, one of the Dow futures trading, and of course, it requires a little bit of understanding on accumulation and distribution structure. So when we talk about accumulation and distribution structure, and this also means that understanding where the professional traders and investors are actually buying and selling. So if you actually trade along with this smart money, then of course you get to profit along with that. So let's say, for instance, if we start at the accumulation stage, right here. So this is where, because if they are buying, they have a very huge position. Of course, if they are buying into the trade, of course, then they'll start to actually place some buy limit orders at the different during different time. So of course they'll let the environment come into. I mean, let the trade to come into the environment, so they could get the best price or very low price when they're buying, right? So now, of course, when they are actually doing this, they're actually doing it in a very subtle manner, where there's actually very little awareness from the public that they actually buying into this trade right here, this product right here. So they're just like sponges. They just allow the trades to work into their favor. So what happens is that after they have accumulated enough, then they'll start to actually buy in a little bit more here to trigger some momentum. So that once this momentum is triggered, then the seasoned traders and investors, they start to come in at this level, creating some uptrend pattern. So the waves are actually a little bit smaller right here, because not many of people know that the trend has just started. And of course, after this phase, then we'll see more of a public joining into this, buying into the product. So once they buy into this product, you can see the waves here because of euphoria. It's a lot bigger than the waves right here. So what happens is actually it creates a parabolic pattern, up move, and of course the highest, the most majority of people buying in is around this stage, where the waves has become very obvious to almost everyone. So now what happens is that when it comes to this level right here, this is the best time for those who has accumulated right here to sell, because this sometimes it might be even up to a few 100% in some stocks even, right? But of course in futures it's a bit different, and in futures products, what we can see is that in the accumulation stage is a bit, the swings are much more bigger. All right, so most of the time when you see subtle, very subtle patterns, this is what we call rounding bottom. This is mostly in stocks, right? Then of course when they sell, they have to they have big positions. When they sell, they have to sell it in different stages, right? So once they sell here, then it's like creating another opportunity for the retail traders to take it up higher, right? Because in this time probably you have dynamic moving support, the moving average, right? So once the public starts to buy in more, then the professional traders starts to sell right around this area. So when they sell, then it creates another down move. So as the wave patterns starts to fail, in failing and making higher low, then of course this is where most of the positions were. The professional traders has already got up from the trade, and of course this is where seasoned traders, they start to notice that the price is weakening. And of course they anticipate for the price, if it doesn't continue to go up, then if it comes down here, breaks down the neckline, where they call this a neckline. And of course after some bulls and bears has been fighting, they form a rectangle here, or they can call it a triple top right here, right? This is a distribution phase. So as the price becomes weakening and breaks out right here, and most of the seasoned traders or investors start to sell around this area, right? Then price starts to continue to go down after that. Then this is where there's a lot of panic right here. The late comers who actually bought right here, they can see some, before that, having some profits, gains around this area. So after that, when the price goes down to this level, they get to see negative uh, unrealized losses right here, and they start to actually panic and they sell around this area, right? So which creates a very huge down move. And of course, once they panic and they sell, it creates another opportunity for the professional traders to get in around these areas because they want to collect sell orders from the ones who are panicking. Right, then it creates another cycle again. So let's continue to the actual trade scenario. So look, if we look at the chart here between the 3rd and 15th of April last month, what we can see is that some accumulation phase, markup, distribution, then of course, let's see, there you can see accumulation phase has been initiated right around these areas, then form some sort of resistance. Once it breaks up, then markup phase are usually very, very short in futures trading products. Then distributions, then markdown phase, and final markdown phase, price starts to actually goes down sharply because of panic, and this is where professional traders are actually also picking up the trades and forms another accumulation process. The phase then starts to have a markup phase again, then price goes up. Right. Of course, I'll explain this in detail. And what I see is that I see some kind of support right there, and I bought into the trade around, yeah, over here. Bought into this candle, and of course, I placed my stop order. Then the profit target is somewhere around here. Right. Okay, so let's focus in the early stage of the part of this cycle, which is let's talk about this area right here. What's actually happening right there? So okay, now in the accumulation phase, what we would like to see is that some key reversal candles has been forming. It means that there's some. It's actually price is low enough to attract some buyers coming into the trade, and this is what we see. A pin bar has formed right there, right, which is signaling that this is a very strong support level. So in markets, of course, price has some sort of memory. It takes that as a strong support, and when it actually revisits that area, price will start to reverse. Right. So here, there's a huge flush upwards. Right. Then of course, retail invites a lot of retail traders to come into the trade. And once they buy in here, they will have some stop losses here and the profit targets around there, right? Thinking that the price will actually go up. So what happens is that the professional traders starts to flush them out, taking out their stop losses and forming some kind of support again around this area. Right, then the price starts to go up again, and it was actually slammed down again, right, creating also another support level right here, which this is a nice reversal candle. Then which accumulation has been done more enough right here, and price finally breaks out, but it didn't break out in a very very strong manner. Then when price breaks up over there and starts to wave down and also form some sort of pattern right here where we call it a bullish flag. So bullish flag. All right, so this is also very obvious to most of the retail traders or investors. Once they see bullish flag, they get ready to put some, some most more aggressive traders. What they'll do is that they'll actually put some buy stop orders right here, and stop losses around these levels, right? So of course, with risk reward ratio around 2 to 1. This is 1, and this is stretches to about 2 times right here, right? So with that, of course, they have not got out of from the trade yet, and majority of them are still inside the trade. Probably, yeah, some maybe might have taken out the trade, and of course, the price starts to continue to go up on this markup phase. And then, of course, this markup phase, there'll be some retail traders taking out their trade right here, and once they actually take some profit, their price starts to consolidate a little bit, and it forms a bull flag right here. So once the markup phase, it's initiated, and people will think that the price will start to trend up, continue to trend up, and people who actually trade on breakout patterns, once they see a long bullish candle, and this is where a lot of retail traders also are actually coming into the trade, that thinking that the price would continue to go up, because it's very obvious to everyone that the trend is continuing right here, and there's some breakout patterns that they could actually capitalize on. And of course, this is where it gives a very good opportunity for the professional traders who has actually accumulated around these areas to actually get out from the trade. And of course, once they get out from the trade, it creates some sort of a weakness right here. You can see some weak which is forming around this area. And with that in mind, of course, some traders see this as a very good breakout pattern, where they see more than half of the body candle has actually closed above this resistance. And as price comes back and revisit the resistance, it's also formed some sort of support. And of course, breakout traders, what they will do is that once they see this retracement candle, they'll start to place their buy orders around this area, or they'll just execute on the market orders, and in anticipation for the price to continue to go up. And of course, after that, what they can see is that they can see there's a markdown candle closing right below the resistance, signifying that this would actually fail. So when this price pattern has actually not closed right above, and this is a very good sell signal for, I mean, if those who have actually noticed that this breakout pattern is about to fail, and also knew that this was actually a major distribution phase, because right here it seems that there's a lot of rejection, then the professional traders has actually placed their sell limit orders right here, all right, or their profit targets around here to actually get out from the trade, where this is where the maximum euphoria is. Okay, so continuing to the next phase is that, of course, after distribution there'll be markdown phase. So when the markdown phase is pretty obvious when the short-term moving average, which is the red color line, crosses the long-term moving below the long-term moving average right here. All right, crosses down, and the long-term moving average is also sloping downwards, which means a new downtrend has been initiated, and of course we call this a markdown phase, right? So let's continue what is actually more likely to happen right here. Now after that we see a death cross, then a markdown stage, then of course here we see a very huge selling pressure, which is also some panic selling which is happening right here. A lot of retail traders was selling out here, and of course this is the best time for professional traders to pick up the trade, and of course they have to slowly pick up the trade without actually giving out to the market very clear signal that this is going to reverse again. So subtly doing that, they have to just initiate a small position, probably right around this area. I mean, they've already been buying in here, so seasoned traders or professional traders they also buy in some positions right here, and also this is where I took my trade, right? Then of course we zoom in around this area and have a look on that, and then of course price consolidates a little bit right here, but to me this is accumulation stage. So what we see What will be more likely, what we see is that once you buy into this level, then of course if you buy in early, then you have to wait a little bit longer, because right here the market will actually take the price either down. They want to continue the price to go. They want to take the price to go downwards as it hits the moving average, and this is some selling pressure from the retail traders, and of course the professional traders would actually place their buy orders around these areas to absorb their sell orders. So and then price starts. Those who are bullish will start to take the price up. Then the retail traders, sorry, the professional traders will start to actually slam the price down to take out the retail traders. And again, price starts to recover. Retail traders are buying in. Minor flushes right here, small consolidation. Then another minor flush right here. So then the more retail traders are starting to take the price up again, and professional traders starts to slam the price down. So what it forms here, it actually forms a rectangle. All right, forms one. Some people call it a rectangle, but how we see it, whether it will be a more bullish price pattern, is that most of the time, what I like to see is that when the price goes up, it goes up in a 45 degree angle. All right. Then when price goes down, it goes down in a 70-degree manner, or more than 70 degree. Very sharp price movement goes down, up, down, up, down. Then 45-degree angle up, and almost about 90-degree angle down. So this actually signifies to me that the professional traders or the big players are actually accumulating around these areas. All right. Then with that happening, then the price would likely to break above. So of course, they need a lot of liquidity to accumulate their huge positions. And what happens then next is that it's pretty interesting that the price actually broke downwards. And of course, this will invite a lot of short sellers coming into the trade, that thinking that the markdown phase is still intact. So this is where it also induces a lot of fear. Those who have bought in around this area had the stop losses around here. And this is actually to hunt the stop losses and those who actually place their stop loss right around here. So what I've done is that I've bought here, and I actually monitor my trade. I did not have a stop loss right here. Actually, I remove it once I see this, because I'll be waiting for the price to close back upwards. So right after that, of course, there's a lot of accumulation happening. Then price close back upwards, which means this is a failed breakout, or some traders call it a fake out pattern. So if I move into 1 hour chart, because we were in a 30 minutes chart right here. If we move into 1 hour chart, this is what we see. So we can see that this is a huge, this is a pin bar, right? There's some support right here. Pin bar closes right back above this support level after this huge red bar. Then this is a long markup candle, which is more than half of the body actually closed right above. Which also, I mean, if the short sellers comes in around this area, they would place their profit target around here and their stop losses around here, right? So this will actually trigger a lot of, buy orders around here, right? So that's why you can see there's a huge markup candle. Right, let's continue. So, okay, as you can see, if the pattern fails to go down, and the price, this is where it satisfied a lot of accumulation, professional traders who has been accumulating over this stage. So then after that, they initiate the markup stage, and the price finally breaks out from here. And there were a lot of buy stop orders also as well, because some traders knew that this has already failed, and they put the buy orders here as soon as the price goes out, and creating a large burst of price. And of course, as most professional traders, when there's a lot of euphoria, this is where they can get out from the trade with a nice profit, right? Creating a down move right here. And of course, there'll be some traders believe that the trade will start to, continue to go uptrend, and this actually and forms an ascending triangle. And to most people, ascending triangles are actually more. It's a bullish breakout pattern. And as soon as that is actually forming, because what they can see is that they can see prices are forming. The price is forming lower lows. Higher lows. All right, which means that the uptrend is still intact. So it also signifies that some of the bears are waiting right here at this line, which is defending this line as the price breaks out around this level. Then, of course, there'll be okay. This is where also a lot of traders, retail traders, coming to buy, thinking that the markup phase will likely continue. Right. Of course, this is also another opportunity for the professional traders to unload, which they have bought around these areas, and this is a very nice profit level for them. All right, so it gives them a lot of liquidity to get out from trade, where we can see what will happen. What happened next is that price starts to close below this resistance, and this is actually a very good sell signal. And then price starts to go down. So we can call that a distribution stage. And this is my actual trade right here, which I actually all right. All right, which I actually entered around, okay, there. Okay, which I actually entered around this area. Right, I set my entry right there, and then my stop loss right here, profit target around here. But of course, after that, when I see price starts to move downwards right here, I remove my stop loss, and I was waiting for the price to come back up here, right? So then I hold my trade for several days, or actually just 2 days. Then after that, I got up from the trade right here, right? So before the professional trader starts to use this breakout pattern to actually sell from there before a huge down move. So this gave me a risk reward ratio around 3R. So this is about a 3-to-1 reward ratio in this trade, right? So as a trader, I after some years, we start to become a bit flexible, and some rules are ready to be actually broken when it needs to. But of course, we have to do it by understanding the accumulation and distribution patterns very clearly before we do that, right? So, right, this so this is where I'd like to conclude my trade, and thank you for listening, and hope you share to others, and happy trading and investing. Thanks a lot.